Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about Venezuela. The latest economic data for Venezuela shows that inflation is now running at 436%, which makes it the country with the highest rate of inflation anywhere in the world. And unfortunately for Venezuela, this isn't a one-off event. The economy is currently in its 9th year of recession, which makes it the longest recession in history and more serious than the Great Depression of the 1920s. Now, if you follow the channel, you'll know that we've discussed economic crises in a number of countries all around the world. And the common denominator for a lot of these countries is that they are net importers. They lack resources to generate income to be able to buy in all of the things that they need. However, the situation in Venezuela is very different because Venezuela is the country with the largest oil reserves in the world. And as oil is such a valuable commodity constantly in demand, you would have expected Venezuela to be one of the richest nations in the world. So what is going on in Venezuela? How has the country got itself into this dire situation? Well, today's video will provide you with an answer to that question. We'll start off by looking at inflation and what's been happening over the last 5 years or so. We'll have a look at what's been happening to the Venezuelan currency, because as you might expect with high levels of inflation, the currency has devalued. Venezuela is located at the northern end of South America, occupies a roughly triangular area that is larger than the combined areas of France and Germany, and has a current population of around 28 million people. The country is bounded by both the Caribbean Sea and the Atlantic Ocean to the north, Guyana to the east, Brazil to the south, and Colombia to the southwest and west. The capital of Venezuela is Caracas, which is the primary centre of industry, commerce, education and tourism. As mentioned at the start of the video, Venezuela is blessed with natural resources and has the largest oil supplies of any country in the world, and alongside its oil reserves, it also has significant amounts of natural gas and coal. Prior to the development of the oil industry, agriculture, fishing and forestry were central to the Venezuelan economy and produced more than half of its GDP. Venezuela's main cash crop is coffee, and its staple food crops are corn or maize and rice. It's reported that Christopher Columbus first arrived in Venezuela in 1498, and European explorers named the region Venezuela, which means Little Venice, after observing local houses on stilts above water. The Spanish established their first permanent settlement in Venezuela in 1523. And the country was under Spanish control for almost 300 years until it obtained its independence in the early 19th century after fierce fighting led by revolutionaries Simón Bolívar and Francisco de Miranda. This chart shows the movement in the official rate of inflation in Venezuela over the last 12 months. And as you can see, the current rate of inflation is recorded at 436%, which means that over the course of the last 12 months, prices have risen on average by more than 4 times. And to put that rate of inflation into perspective, this table shows the highest rates of inflation currently in the world. So you can see that the 436% in Venezuela compares to the next highest of 269% in Lebanon. And if you follow the channel, you'll know that I recently posted a video going through the problems that Lebanon has experienced. The country with the next highest rate is Syria with 139%, and Syria has had a long-standing civil war which has decimated their economy. Argentina is the 4th highest and is the last country that has inflation above 100% at the moment. And if you're interested in knowing what's going on in Argentina, I posted a series of videos on their economy. We've then got Zimbabwe at 75%, Suriname at 65%, Sudan 63%, and Iran at 50%. Now, if you quickly cast your eye down the remainder of this list, you can see that all of these countries are experiencing economic crises at the moment. Over the course of the last 12 months, I've posted numerous videos on the problems that are being experienced in Cuba, Turkey, Pakistan, Sri Lanka, and Egypt. But when you compare the rates of inflation in those countries with what's happening in Venezuela, it really gives you an indication as to how extreme the problems are. And if we go back to the 12 monthly chart, you can see that 12 months ago, inflation was running at 167%. And compared to the list that we've just looked at, Venezuela would still rank as the 2nd highest inflation rate in the world. So it's clear that the problems that are going on in Venezuela have been around for some time. And if you look at the profile of this chart, you can see that over the last few months, inflation has really started to ramp up. However, if we now look at this chart, which dates back to 1985, you can see that inflation has been a persistent extreme problem in Venezuela. In 2014, inflation was recorded at 62%. In 2015, it rose to 121%. In 2016, it jumped to 255%. In 2017, it was 438%. In 2018, it jumped to 65,374%. Now, we talk about hyperinflation a lot in economics terms. It was a term coined originally back in the 1970s, and at that point, 50% per month inflation was seen to be hyperinflation. But whatever definition you use, 65,000% inflation is certainly hyperinflation. It is off the scale. In 2019, inflation was recorded at more than 19,900%. In 2020, it was more than 2,300%, 2021, 1,588%, 2022, it came back down to what looks like a more manageable 200%, but obviously 200% is still completely off the scale. So what on earth is going on in Venezuela to cause these extreme rates of inflation? This chart shows the movement in the exchange rate between the US dollar and the Venezuelan bolivar over the last 5 years. And as you can see from this chart, there has been a significant devaluation in the bolivar. However, this chart isn't really a true reflection of the extreme devaluation of the currency over that period, because the Venezuelan currency has actually been devalued by the government on 3 separate occasions. The original bolivar currency was introduced in Venezuela in 1879 and was named after the revolutionary leader Simón Bolívar. As a result of the high levels of inflation seen in the early 2000s, the original bolivar was replaced by the bolivar fuerte in 2008, and a devaluation of 1,000 to 1 was introduced by the authorities. So this meant that 3 zeros were taken off the currency. So a 2,000 bolivar note now became a 2 bolivar note. As a result of the hyperinflation we've just talked about, the denomination of the banknotes started to get larger and larger, and in 2016 Venezuela introduced the 20,000 bolivar note, followed in 2017 by the 100,000 bolivar note. By 2018, the hyperinflation and the associated devaluation of the bolivar currency resulted in the exchange rate with the US dollar reaching 4 million to 1. In order to address this problem, Venezuela once again devalued its own currency, this time by 100,000 to 1, thereby taking 5 zeros off the currency. And new currency notes called the Bolivar Soberano were issued. And interestingly, at that time, the currency was pegged to the new cryptocurrency that Venezuela had issued. At the time of this devaluation, the highest denominated note was 500 Bolivar. However, due to continued hyperinflation and devaluation of the currency, by January 2019, the country issued 10,000, 20,000 and 50,000 Bolivar notes. And by 2021, Venezuela issued its first million bolivar note. And as the exchange rate at that time was around 2 million bolivar to 1 US dollar, a 1 million bolivar note was worth around 50 cents. Now, in order to try to address this slightly embarrassing problem, on October 1st, 2021, the Venezuelan president, Nicolas Maduro, applied a devaluation of 1 million to 1, thereby knocking 6 zeros off the value of the currency. So the previous 1 million bolivar note was now worth 1 bolivar. So if we now return to this chart, you can now get an understanding as to why this doesn't really represent the severe devaluation of the currency over the course of the last 5 years, because the current official exchange rate of around 26 bolivar to 1 US dollar doesn't take any account of the 3 official devaluations that have taken place that have removed 14 zeros from the currency. And when you get a situation like this, where inflation is running at extreme levels and the value of the currency is diminishing on a daily basis, what happens is the residents of that country abandon their home currency and move to the US dollar. And that's exactly what's happened in Venezuela. The vast majority of people in Venezuela are looking to use the US dollar rather than the currency. And it's estimated that over the last 12 months, less than $10 million worth of transactions have taken place in the Venezuelan bolivar. And the only people who are being paid in bolivar are state employees. Everybody else wants the greenback because they've got confidence in the long-term value of the US dollar. Now, before we go on to talk about the problems that Venezuela has experienced, I wanted to look at the movement in oil prices over the last 25 years, because this is really important in terms of understanding what's gone wrong in Venezuela. And what this chart shows is that over the last 25 years, there have been some extreme movements in oil prices. In June 1998, a barrel of oil was trading for around $12.50. However, 10 years later, in June 2008, that same barrel of oil was trading for more than $140. By December 2008, prices had fallen to $46. They then bounced back to around $125 per barrel by April 2011. By January 2016, they were down to $35 per barrel. In September 2018, prices had risen back up to $80 per barrel. They then fell to around $23 per barrel in March 2020, hit a high of around $110 per barrel in May 2022, and today a barrel of oil is trading for around $75. And the reason that I wanted to walk through this graph with you was really to show the cyclicality that the oil industry experiences. We see highs and lows in oil prices, which are generally linked to what's happening in the global economy. At times when the economy is very strong, there is generally high demand for oil, and that pushes prices up. However, when we see a drop in the global economy, that generally reduces demand and we see a fall in prices. And the reason that that's important is that if you're a country that's dependent upon oil revenues, you're at the mercy of what's happening in the market. If you're a producer of oil that's selling 1 million barrels, this time 25 years ago, those 1 million barrels would have netted you around $12.5 million. However, in June 2008, those 1 million barrels would have netted you around $140 million, which represents an increase in income of more than 10 times. However, 6 months later, the price of oil was down to $46 per barrel, so those 1 million barrels would have netted you $46 million, which represents a fall of around 2/3. So what you can see from this chart is that the extreme movements in oil prices have a huge impact on oil-producing nations. When prices are high, they'll be making extreme amounts of profit. However, the price of oil can fall sharply in a short space of time, which means that you'll be getting a lot less revenue. So as a sensible economist, you would say that during the periods of extremely high prices, you should be banking a lot of that profit to cover the periods when prices fall. But unfortunately, it would appear that Venezuela didn't have a lot of sensible economists telling them to do that. This chart, put together by Visual Capitalist, gives you a visual representation of the countries with the largest oil reserves in the world. And as you can see, Venezuela has the largest identified reserves with 300 billion barrels. Saudi Arabia comes in at number 2 with 266 billion. Canada at number 3 with 170 billion. Iran has the 4th largest reserves at 158 billion. Number 5 is Iraq with 143 billion. Number 6, Kuwait, 102 billion. 7, the United Arab Emirates with 98 billion. 8, Russia with 80 billion. 9, Libya with 48 billion. The country with the 10th largest reserves is Nigeria at 37 billion. We've then got the USA with just under 37 billion. Kazakhstan with 30 billion. China with 26 billion. Qatar with 25 billion. And Brazil with 13 billion. The first commercially viable oil fields were identified in Venezuela in the early part of the 20th century, and the first official oil well was established in 1914. During the 1920s, there was an influx of foreign countries and foreign investment. Multiple oil wells were set up all across the country, and by 1928, Venezuela was the world's largest exporter of oil. The industry continued to be developed, and by the end of the 1930s, Venezuela was the world's 3rd largest producer of oil, behind the USA and the Soviet Union, and was still the largest exporter. Now, prior to the oil boom in the 1920s, agriculture was a very important part of the Venezuelan economy, as it was a major employer and accounted for around 30% of total GDP. However, as global demand for oil grew, Venezuela put more and more of its effort into the oil industry, and by the 1950s, agriculture only accounted for around 10% of employment and GDP. Now, Venezuela is a socialist country, and in 1943, its president introduced the hydrocarbons law, which meant that the Venezuelan government was entitled to 50% of all oil profits. However, as a result of the increasing importance of oil to the Venezuelan economy, on the 1st of January 1976, Venezuela officially nationalized all of the oil industry, which meant that the Venezuelan authorities seized all assets owned by overseas companies and replaced the management and the operational control with Venezuelan companies. The nationalization of the oil industry in Venezuela meant that large international oil businesses such as ExxonMobil and Chevron lost the ownership and control of their assets. Venezuela then took the decision to expand overseas, and in 1986 bought a US-based company called Citgo, through which it then acquired refineries in the USA and Europe. In 1999, Hugo Chavez was elected as the president of Venezuela, and he introduced the Bolivarian Revolution, named after the revolutionary Simón Bolívar. As we saw earlier in the video, from 1999 through to the middle of 2008, the world experienced a period of prolonged and progressive growth in oil prices, and this was obviously great news for Venezuela, because they were producing large amounts of oil, and the price kept going up and up and up, which meant that they were getting more and more revenue. And the biggest single concern from Venezuela's point of view was that all of these problems had arisen at a time when oil prices were marching towards an all-time high. The severe drop in global oil prices seen at the end of 2008 caused major problems in Venezuela because the country saw an extreme fall in its income. And from an economic perspective, this problem is referred to as Dutch disease, which is a situation when a country becomes dependent on income from one individual source. And the reason that it's referred to as Dutch disease is that this phenomenon was first coined by The Economist in the 1970s, relating to the discovery of the Groningen gas field in Holland in 1959. Demand for the export of this gas was very high, and as a direct result of that, there was a lot of demand for the Dutch currency, which meant that it strengthened significantly, which made all of the other exports from the Netherlands relatively more expensive, and this made these products less competitive in the international markets. So the country saw a decline in its other exports at the same time as gas was taking off, and this created major problems in the Dutch economy, and Venezuela is suffering from exactly the same problems. Over the course of the last 60 or 70 years, the economy has become entirely focused on oil. All other parts of the economy have been left to go to rack and ruin. They really haven't had any levels of investment. And that clearly represents a major risk for any country, because if there's a major fall in the value of oil, or you have some other production problems, then that is going to leave your country very exposed. Now, going back to the oil price chart, the fall in oil prices in 2008 recovered over the course of the next few years and remained high until the middle part of 2014. However, by the start of 2016, oil prices were down to around $30 per barrel, and that represented a major problem for Venezuela, and the country went into recession. Now, in terms of what was happening from a political perspective, Hugo Chavez, who had actually recently started his fourth term in office, died in March 2013, and his chosen successor, Nicolas Maduro, was voted into power 1 month later. The Venezuelan economy was already suffering significantly, but the sharp fall in oil prices dramatically reduced the amount of income that the country was earning and threw the country into a deep recession. The lack of investment in the oil industry over the previous 15 years started to take its toll, and production levels started to fall dramatically at the same time as prices were falling, so this was a real double whammy for Venezuela. As we saw earlier in the video, the economy started to experience extreme hyperinflation. Prices went out of control, and there were shortages of food and medicine and all basic essentials. The people of Venezuela took to the streets to protest against the president's new policies and his management of the economy, and over 100 people were killed in clashes with police. By 2017, the situation had got so bad that Venezuela was actually experiencing gasoline shortages, which is incredible for a country with the largest oil reserves in the world. A humanitarian disaster was declared in Venezuela, and it was reported that in 2018, over 1/3 of all of the people in Venezuela had lost weight by what was referred to as the Maduro diet. Basically, people were eating less than one meal a day. The presidential term in Venezuela runs for 5 years, so in 2018 a new election was held, and when President Maduro was voted back into power, allegations were raised by the USA, the European Union and numerous other countries relating to corruption over the election. And as a direct result of the combination of these corruption allegations and the humanitarian crisis, the USA, the European Union, the UK, Mexico, Panama and Switzerland all raised sanctions against Venezuela. Historically, the USA had been the largest purchaser of Venezuelan oil. However, from 2019 onwards, it no longer purchased any oil. At that stage, Venezuela had been in a deep recession for 5 years. However, the impact of the sanctions made things significantly worse and further reduced both the income that Venezuela was earning and also the potential for any future investment into its oil industry. So what's the summary and conclusion today? Well, I wanted to post this video really to give you a better understanding as to what is going on in Venezuela. You may have seen in the press over the past few years that Venezuela has extremely high rates of inflation, that it's having major problems, but how does that fit together with having the largest oil reserves in the world? Because logically speaking, you would expect the country with the largest oil supplies to be one of the richest nations in the world. But as we've seen from today's video, the oil industry and the economy in Venezuela have been very badly managed over the course of the last 50 years or so. The decision to nationalise the oil industry in 1976 was in line with the socialist principles in the country, but the problem that Venezuela created for itself at that point was that by seizing all of those assets, that meant that overseas companies were not going to invest further into the oil industry in Venezuela. So the responsibility was entirely upon the Venezuelans themselves to keep of the last 50 years. That hasn't happened. The Venezuelan authorities have been making hay while the sun shined. They made a lot of profit from the oil that was being produced, but they weren't reinvesting that profit into those facilities. So over time, that machine food to put a smile on your face.